You've spent months building your business idea, perfecting your pitch, maybe even landing your first client, and then someone asks, wait, are you even incorporated? The wrong answer to that question could cost you everything you've built, and the right one could save you thousands in taxes and lawsuits. Here's the thing. Most founders treat business structure like a technicality, like choosing a font for your logo, but it's actually one of the most consequential financial decisions you'll ever make. We're talking about the difference between the IRS treating you like a person or a corporation, and those two things are taxed in very, very different ways. Think of it like choosing between renting, owning, or co-owning a home. Each structure comes with different rights, responsibilities, and exit doors. An LLC gives you flexibility, like renting, an S-Corp hands you a tax scalpel, and a Corp is basically buying a commercial building with an elevator and a lobby. Not long ago, everyone was screaming, just form an LLC, like it was the universal answer to every business prayer. And honestly, for a lot of solopreneurs, it worked fine until they started making real money. Now that conversation has shifted, and more founders are waking up to the fact that their structure is quietly bleeding them on self-employment taxes every single quarter. The psychological weight of this decision is real. Nobody wants to feel like they picked the wrong team jersey at the championship game. But experts like tax strategist Mark Kohler have said for years that the S-Corp election alone can save an active business owner anywhere from $5,000 to $30,000 annually once profits cross a certain threshold. History tells us these structural decisions tend to follow a pattern. Founders ignore them early, panic about them at a crossroads, and regret them during tax season. Every business cycle produces a new wave of entrepreneurs who discover, usually the hard way, that what you earn and what you keep are two completely different numbers. The LLC is the Swiss Army knife of business structures. It protects your personal assets, requires minimal paperwork, and doesn't force you into a rigid tax box. But here's the often missed twist. An LLC by itself doesn't change how you're taxed. You can actually elect to have your LLC taxed as an S-Corp, which is where the real magic starts happening. The biggest misconception is that Corps are only for Silicon Valley unicorns trying to raise venture capital, but that's only partially true. If you ever plan to bring on investors, issue multiple classes of stock, or position your company for acquisition, the Corp structure is built for exactly that game, in a way the others simply aren't. So what do you actually do with this information? How do you choose without a law degree and a CPA on speed dial? The practical rule of thumb is this. Start as a single member LLC for simplicity and protection. Elect S-Corp status once your net profit consistently clears around $50,000 to $80,000 a year. And only consider a Corp if outside investment or an exit strategy is genuinely on the table. Discipline here means not just picking the cheapest option or the one your cousin used. It means modeling your actual projected income and running the numbers with a professional before you file anything. Structure isn't a set it and forget it decision. It's something you revisit as your business evolves, your income grows, and your goals shift. The irony of all this is that the legal and tax system actually rewards people who plan ahead. Yet most founders treat incorporation like an afterthought they'll figure out later. Later, as it turns out, often comes with penalties, back taxes, and a very uncomfortable conversation with the IRS. At the end of the day, the business that wins isn't always the one with the best product. It's often the one with the tightest financial foundation, the lowest unnecessary tax burden, and the structure that matches where it's going, not just where it is. Consistency in your decision-making process, humility to revisit your assumptions, and patience to build the right way will always outperform the hustle of someone who moves fast and breaks their own balance sheet. And whatever you decide, LLC, S-Corp, or Corp, the peace of mind comes not from picking the right answer, but from making an informed, rational choice with full awareness of the trade-offs. You can be comfortable with any outcome when you've done the work to understand what you're stepping into. If you're ready to take that next step, whether it's real estate investing, home contracting work, or finding the right lenders to fuel your growth, check out our links in the description below and let us help you get started the right way.